Hello traders, Jeff with optionboxer.com. Have a video for you today talking about diversification, but before we get into it, please know I'm not a registered financial advisor and this video is in no way a recommendation for you to buy or sell any security or place any options trade. Please make sure you're doing your own research prior to trading. So what I've created here, kind of what's highlighted now with my mouse here, is I just created a quick tool to randomly generate 3 different positions out of these 5 positions. And I've already went ahead and done that before I started the video, and I've just got all of them set up here for these different ticker symbols. You'll notice that there are a couple different things to point out, there's a couple things I need to point out so you'll notice that I do meet my diversification goals. The first thing being that these are all different companies. They're all different sectors, so that handles the sector diversification. Gold and TLT are, handle the diversification for asset classes. The strategy diversification, you'll see I've got 3 different strategies for each position in each different round here. And then time diversification, we're not going to be able to diversify by time at this moment. If this works out, we may try to add that layer of diversification in there. But I feel like these are probably the big 3 the big 4, I guess. When it comes to diversifying, especially when you're talking about options. And I have no idea if this will be successful over the course of these 3 rounds, but we're going to look at it and see if our account grows, using this. So I'm not using any particular management. I'm not doing any technical analysis, any fundamental analysis. I'm basically just setting up these 3 trades for Bank of America, these 3 for gold, these 3 for Intel, and so forth. For each one, and then as they become profitable, I'll close them. If they don't, we will close them at expiration, and then start on to round 2. So that's going to keep it as simple as I possibly can. Sorry, I should say, if you want to pause the video, you can see the different trades I'm making if that's of interest to you. I'm not going to go through each of them here. You'll just have to trust that for Bank of America, I've got the trades that are mentioned there set up, and so forth. If you wanted to see them, there they all are. Again, not going to go through it because I don't think it adds any real value. So we're going to go ahead and fast forward. We're going to kind of skip through time a month at a time. Since we have 78 days, we're going to go ahead and just skip a month, and we can just go to the first of the next month and give it a chance to load up here and see how it looks. So you can see it looks like everything is a loss except for TLT. So we would want to close our TLT position, and I'm going to go ahead and do that now. So give me 1 second. I'm going to pause the video and be right back. So I made a mistake. I went to February 1st, which was a Saturday. I fast forwarded to the 3rd, and you can see that the position is even more profitable now. So we're going to go ahead and close it, and I'll be right back. Okay, so I've gone ahead and skipped ahead again to the next month, March the 2nd, and you can see Bank of America did really well for us here, so we're going to want to close that position as well. With such a little amount of time left, 18 days to expiration, it would probably be smart to go ahead and close the other remaining profitable positions, and I'll do that now. We'll leave Intel, that looks like Kraft Heinz and Pfizer would need to stay on the books just to see what happens. And then we'll fast forward again to the expiration, and then we'll go ahead and set up round 2, and then of course round 3 again. So give me 1 second, and we'll get that set up. All right, so I've gone ahead and skipped ahead to expiration day, and you can see Kraft Heinz was able to turn a small profit as well, with Pfizer showing a pretty serious loss. So we'll go ahead and close these trades. Just try to get them off the books if we can. We have to try. Yeah, I may not be able to close this one. So may have to keep that one on just to, I guess it's a maximum profit there. And then Pfizer will want to go ahead and close what we have here as well. It looks like a maximum loss, I should say, on that Kraft Heinz. So we'll sell what we can, and then we'll set up the next round. So instead of wasting your time with this, I'm going to go ahead and close all these, and I'm going to go ahead and set up round 2 here. And I think before I do that, we could call this a successful first round. Our account's up by $486 over the last 78 days in this test. So we'll see how round two looks, and we'll go from there. Okay, so I've got round two set up here, and the market was pretty crazy at this point in time last year in March. So I don't know that realistically we would have gotten filled on some of the positions that I set up. And so I just put this on the screen so you can see round two is what I've got. And you can see this is going to be a little bit skewed here on Kraft Heinz by $56 because we weren't able to close that one position that was open right here, this March 20 call there. So anyhow, I've got it set up. We're going to skip ahead a month and see what it looks like. Or actually, we'll skip to the first of the next month. So let's go to April 1st. Give it a second to load. All right, so it's loaded up, and you can see it looks like it did pretty good here on Intel, so we probably want to close that position. Nothing else looks like we need to close, although Kraft Heinz did pretty well also, because it looks like it was able to overcome that trade that is now 12 days expired. But in a short period of time, it looks like we've got a pretty good, actually, I'm sorry, here it is, 175. Looks like we did pretty good on Intel and then Kraft Heinz as well. But that's after only 12 days. So we'll fast forward again. I'm going to close this Intel position, and we'll see what the rest of it looks like. Okay, so I went ahead and skipped ahead to the start of May, and you can see our positions did not fare so well. Looks like we're only positive on one, and that's Bank of America. So at this point, it would probably be a good idea to close Bank of America, and then we'll just hold these until expiration day. So I'm going to close Bank of America and skip ahead to expiration on these other ones, and then I'll be right back. All right, so I've gone ahead and skipped ahead to expiration day, and it looks like it's kind of gone from bad to worse here on the account. We're still up by 171 overall, so we're still positive, but we were much more so prior to holding these trades to expiration. So I'm going to go and close these, set up round number 3, and we'll skip ahead to the beginning of June here and see how it looks. So I'll be right back to do that. Okay, so I've gone ahead and set up round 3 here, and I have those trades already on demand here. I haven't skipped ahead just yet. We'll do that now, and I'll finish the video with everything on screen so we can kind of see how this thing finishes up. So we'll skip ahead to the 1st of June. If it's a trading day, it may take just a moment for it to load up, and we'll see how it goes. You can no longer really trust this number because so many of these, like this 771, that's from that's from round 2, I think, and so we'll have to see how things look, on an individual basis. So it looks like Bank of America, it was good again. Looks like this was further down. Intel, just have to run a quick scan, kind of just see where we sit. Looks like we still need to hold that. Still probably need to hold Kraft Heinz. Pfizer, let's see. Pfizer, we were way down. It looks like we battled back a little bit there, possibly. But it looks like we need to continue holding, and we'll do that now. So I'm going to close Bank of America, and then I'll be right back. I know I said I was going to keep the video going, but it turns out I do need to pause it one more time. Okay, so I closed Bank of America, and I went ahead and fast forwarded all the way to expiration day for the current round of contracts here. And you can see after all of that, after 180 days, we're only up by $79. So it's tough to say how this diversification may have looked had we actually managed the individual positions, on a daily basis. But had we managed it on basically a monthly basis, or every couple of weeks, we would be looking at a $79 profit. Now that's certainly better than I expected it to go. I figured this would be a complete loss since we didn't do any kind of analysis, and we we didn't, like I said, manage these positions along the way. Had we done so, we could have probably gotten out of some of these for a profit and turned turned this 79 into something a little more meaningful. But that being said, our emotions may have gotten in the way, and we may have ended up turning what could have been a $79 profit into a larger loss, or I'm sorry, a lesser profit, or even a larger loss, and so that's kind of how it shaped up. But I thought it would be a cool video because it's something that I'm always considering, is the nature of diversifying my options trades or my options portfolio. I am pleased to see that with very little management we were able to turn a profit, albeit a small one, given the amount of risk that we had on the table, and honestly that may not have even covered the commissions, to be able to set up all these trades that we did over the course of this particular test period. In any case, it's there for you to take a look at and consider for your own trading. Again, not a recommendation to do it, just something for you to see, and something for you to think about when you're setting up your next portfolio of trades. But that's all from me. If you have any questions, feel free to reach me at optionboxer.com. If you did watch this video and you liked it, please like and subscribe to the channel. Appreciate it. See you later.